Peru, what are some of the specific areas that small investors should be paying attention to when it comes to China? What are some of the sectors that you're watching?
Well, in our equity portfolios, as you rightly point out, we've allocated roughly 40% of the capital that we manage in companies, in businesses in China, which are poised for good long-term growth. We own a railway company in China. We have got an investment position in an energy firm. We own a stock in a kitchen appliances manufacturer, which is just setting up its own branded product. We own a meat producing company. We own a leading insurance intermediary firm. We also have shares in an upcoming supermarket retail chain in Beijing. So these are some of the areas that we are looking at. Essentially, what we are betting is that domestic consumption is going to pick up. And we are trying to stay away as much as possible from those businesses which derive a significant portion of their revenue from exporting to the West, because we believe that aggregate demand in the West is going to remain weak. But that doesn't mean that the entire Chinese economy is going to slip into a horrible recession or a depression. As I point out, the debt levels in China are still very, very low compared to the GDP, and this leads us to believe that our businesses are going to produce some good growth over the next decade.
You know, it's interesting as we watch China because they are kind of a interesting pattern, setting an interesting pattern from where the United States was as we began to modernize and as we began to move from the rural areas to the urban centers, the development of the automobile, the development of the highway systems. We're kind of seeing that play out in China right now. And some of the same trends seem to be developing, such as the automobile, obviously the rise of the middle class, and now there's obviously fast food restaurants on many corners in China. You know, one of the big plays lately has been, McDonald's trying to get in. Obviously, they've really been dispersed across the country. Also, Yum Brands has gotten in, KFC, some of these different fast food chains. Are we kind of seeing a replay of what the United States went through in the 1950s, 1960s all over again in China?
It seems to be that way. What we have observed from history is that whenever the per capita income levels of any country exceed that $5,000 level mark on a purchasing power parity basis, then for some strange reason, all these economies usually follow the same pattern. They start increasing their domestic consumption. People in those countries start buying motorcycles, refrigerators, kitchen appliances, and then automobiles. They start moving into bigger homes. Their demand for insurance products goes up. The demand for mutual funds, for financial services grows up, and this is a pattern which has been observed not only in the US but also in Europe and in other more developed Southeast Asian economies such as Hong Kong, Japan, South Korea, Taiwan, and it leads me to believe that things are not going to be any different in China or in India for that matter, because you have 2.3 billion people combined in these two countries. And some of these people, or the vast majority of people in these countries, still don't own a car or a motorcycle. And once their incomes increase, then they're going to start wanting the same things which Westerners have enjoyed and people have enjoyed in the developed countries for many, many decades. And this is going to put a huge amount of pressure on energy, on some of the basic raw materials and agriculture.
Peru, let's move from the Far East over to Europe finally, and let's just bring up the fact that the euro obviously has been in a difficult time, especially when we consider that Greece is facing pockets of an unemployment of up to 70% in some areas. What is your outlook telling you about the European monetary system? What is happening there in your opinion? And is it a safe haven for U.S. investors?
Well, I don't particularly like the European currencies, simply because there are too many nations, too many different agendas, too many politicians involved. And usually whenever politicians get involved, the end result is a mess. I think investors should look at some of the other currencies, such as the Australian dollar, the Canadian dollar, the Singaporean dollar. These are some of our preferred currencies in the developed world. I also think those people in America who want to get out of the US dollar and want to get exposure to some other currencies should perhaps looking at buying the Shanghai Composite Index through an ETF, because then you get exposure to the renminbi or the Chinese yuan, which is likely to appreciate significantly over the next decade. In my mind today, if the Chinese currency was fully convertible, it would be the strongest currency in the world, because as I said, the Chinese government has got huge foreign exchange reserves, a very high savings rate in China, hardly any debt, and they are a big export-based nation. So the Chinese yuan looks very attractive to me, and so does the Indian rupee. I think both these currencies are likely to appreciate over the next 3 or 4 years. So these are some of the currencies we do like. The euro is due for a bounce. It is extremely oversold. But to be honest, I don't really understand the fundamentals of the euro as much, because I don't know what politician is going to come up with what sort of policy which might change things. So for our money and for our clients' money, we are staying away from the European currencies as well as the US dollar, because I think ultimately all these currencies are going to be debased and devalued because of the debt overhang in the Western world. There is no option but to print money and debase their currencies, so we are trying to stay away from this troubled area totally.
Well, there's a lot of information there, Puru. Thank you so much for your time. If our listeners would like to learn more about you and your work, how can they do so?
For sure. My firm is based in Hong Kong. We are regulated by the Securities and Futures Commission. We manage discretionary investment portfolios for clients. We also publish a monthly newsletter called Money Matters, which is available through subscription from our website, which covers the global economic trends and highlights some investment opportunities in terms of sectors and markets which we like. All this information can be obtained from our website, which is www.purusaxena.com.
Thank you so much for joining us, Puru, and hopefully we'll have you back on the show soon.
Thank you very much. It's been my pleasure.